Hello everyone, my name is Hitesh and I welcome you all to Trade Brains YouTube channel. If you're new to this channel, please comment, like and subscribe to our videos, and please don't forget to press the bell notification icon so you receive updates about the fresh content straight onto your device. Now through this video we'll be dealing with the industry which has been the most affected or the most volatile during the times of pandemic, and I'm talking about the pharma industry. Now we'll also be analyzing the shares which have been mostly impacted because of the COVID and the shares which have had the maximum volatility during the times of pandemic in the pharma industry. So let us begin our discussion right into that. So through this video I'll be choosing the 5 top pharma industries which have been the most impactful player during the times of pandemic. And how do we go about doing that? We simply go to the portal of tradebrains.in. It's a newly launched research portal. I would recommend you to go and have a look at the portal and do your research on it. All you got to do is just type portal.tradebrains.in and you reach onto this web page which is flashed on the screen right now. Now the important point of contention here is that how to choose the 5 companies which we should be using to analyze the pharma industry. You just have to go to the screener which is on this website and select the industries, and you select the pharma industry, which is, if you scroll down, you get to see pharma industries right here. That is the pharmaceuticals and drugs, and you run your query based on that. So I'll be choosing the top 5 companies based on terms of market capitalization, and the top 5 names which come to our minds are the Sun Pharma, Dr. Reddy's, Divi's Lab, Cipla and Biocon. So these are the 5 companies. I'll be doing my research on that. Now, how do I go about doing the research? One way to going about doing research is open 5 different windows, put all the detail about those 5 companies on that different pages and do research based on that. And the other way of doing the research is you use the software of Compare Stock, which is on the website of portal.tradebrains.in. You just open that software and you just plug in those 5 companies. You see, this portal allows you to compare 5 different stocks at one go. You can compare companies within the same industries, or you can compare companies across industries and make investment decisions based on that. So the companies which we'll be choosing here is Sun Pharma, Dr. Reddy, Divi's Lab, Cipla and Biocon. So you just keep on plugging the company's name. That is Sun Pharma is the first option. The second is Dr. Reddy. The third, fourth, fifth are Divi's Lab, Cipla and Biocon. Divi's Lab, Cipla and Biocon. And you run your query based on that. Now if you look here, you can do comparative study both on the standalone balance sheet and the consolidated balance sheet. So for the sake of explanation, I'll be using the standalone balance sheet here, and there are few key matrices which are being mentioned here both in the graphical and in the numerical front, and we'll be doing our analysis based on that. So the first factor which I'll be doing is to find the top 5 companies which you already have. Those are Sun Pharma, Dr. Reddy's, Divi's Lab, Cipla and Biocon. And then you're going to be doing the comparative study based on size. So how do we go about doing the study on size? You just simply look at the market cap, and if you look at all the numbers presented here, the clear-cut winner in that regard is Sun Pharma. It's got the maximum market cap in the market, which is about 1,13,000 crores. So in terms of the market cap, Sun Pharma is a clear winner. The next factor which I'll be doing is the P ratio, that is the price to earning ratio. Now it is generally said that the lower the ratio it is, the better it is for the company or the industry. So by keeping that in mind, Biocon is being completely ruled out because it's got the highest PE ratio, which means the current price of the share against the earning is kind of very high for Biocon, and which makes it a slightly risky venture to invest in. The second most expensive shares in terms of PE is the Divi's Lab, and the top 3 in terms of ranking which are favorable for PE ratio are Cipla, Dr. Reddy and Sun Pharma. So in regards of price to earning, our vote goes towards the Cipla, Dr. Reddy and Sun Pharma. Now the next ratio which I'll be talking about is the price to book value ratio. Now it is said that the lower the ratio it is, the better it is for the investors to invest in. So in this factor also, Cipla is the clear-cut winner with the price to book value ratio of 3.46. The second in line is Sun Pharma. The third is Dr. Reddy's. The fourth is Biocon, and the fifth is Divi's Lab. So the clear-cut winner in the 2 factors have been Cipla, and Sun Pharma has been doing very well in the other 3 factors. Now, the next important factor which I'll be talking about is the return on equity. Now, we have to understand what exactly does that mean. So, return on equity basically means the amount of equity which is in the market, what is the return you're generating against it is. So, that is one factor which we have to look about, and the number, that is, the higher the number it is, the better the company is to invest in. So, with that keeping in mind, Dr. Reddy has got the highest return on equity, that is 21.22. The second in line is Divi's Lab. The third is Cipla. Fourth is Sun Pharma, and the fifth is Biocon. So if you look at all the 5 factors we have discussed so far, Biocon has been lagging behind all the 5 factors because it already looks like it's got a slightly overpriced in the market, and the investment at the current prices could be slightly risky ventures for the investors over a period of time. The next important factor which I'll be talking about is the return on capital employed. It basically shows the amount of return which is generated on the amount of capital which has been employed for running the business of the company. So the highest the ROCE, the better it is for the investors. So in this regard, Divi's Lab leads by a distance. The second in contention is Dr. Reddy. The third is Cipla. Fourth is Sun Pharma, and the fifth is Biocon. The next factor which I'll be talking about is the current ratio. Current ratio is basically the division of current assets divided by current liabilities. The higher the ratio, the better it is for investors, because it means the more amount of money which is there with the company for meeting the short-term obligations. So the highest in this regard is Divi's Lab. The second highest is Cipla. The third is the Biocon. Fourth is Dr. Reddy, and fifth is Sun Pharma. Any ratio above 1 is supposed to be the minimum benchmark for the companies to be investment worthy. So all the 5 companies meet the criteria, but Cipla is a clear-cut winner here. The next important ratio which I'll be talking about is the price to sales ratio. That is the price of a share as against the sales of the company. Supposedly, if the sales of the company is rupees 100 and the price is 200, and the price to sales ratio is 2. So we say the lower the ratio it is, the better the company is to invest in. So in that regard, Cipla leads the game by having a price to sales ratio of 4.7. The second is Dr. Reddy's. The third is Sun Pharma. Fourth is Divi's Lab, and fifth is Biocon. And the next, but the most important ratio is the debt to equity ratio. It is said the company which has got very less debt are considered more favorable for investment. So in that regard, Biocon, Cipla, and Divi's Lab have a debt to equity ratio of 0. Dr. Reddy has 0.1 and Sun Pharma is 0.26. So these 5 companies are relatively debt free, and the amount, even if some companies have debt, that is on the very lower side. So that is one good factor while choosing the company in the pharma sector also. Now, if you come down on this website, you see all the companies in all the important factors have been mentioned in a graphical form. So you can just have a glance at the graph and you can have a judgment about which companies are good to invest and which companies are not investment worthy right now. In that regard, the first ratio which I'll be talking about is the return on equity, which means the amount of money which is being made by the company on the amount of capital employed. If you see over the last 5 years, Divi's Lab has been performing very well. It had a ratio of about 27% in 2016, which has almost dipped a bit, but still it's close to 20%. It has been consistently beating the other players in the market. Dr. Reddy was on a stable range between 2016, 17, 18, 19, but over the last 1 year, it has seen a substantial raise in that, and the ratio has come up from almost 10 to beyond 20 levels, which is why we can see that Dr. Reddy has been doing very well in the market right now. Other companies like Biocon, the Sun Pharma have been consistently returning the customers a return of about 10 to 12%. So that is one factor which we are considering while choosing a companies which we should invest in. And in this regard, I would say Dr. Reddy has been doing very well, and Divi's Lab have been beating the other players in the market. The next ratio I'll be talking about is the net profit margin. That is the amount of net profit which is generated by the company on the investments which they have made, or on the amount of money which has been made by them over the year. In this regard, for all the 5 pharma companies have been doing very well in the market. The minimum ratio for the last year was with Cipla, and the winner in this category was Divi's Lab because it's got the maximum net profit margin, and which is close to 25%. Even the company which has the least margin is having a margin of nearly 16%. So you can't complain about the profit which has been generated by the pharma companies, and this could be also attributed to the amount of medicines which have been sold, amount of other medical items like the sanitizer, gloves which have been sold by the companies, and they've been making very good return on the investments which have been made by the people. And the next ratio I'll be considering while doing the comparative study among the pharma companies are the profitability ratios. And I'll be talking about the ratios like the net profit margin, which I have also discussed in the graphical form. And Divi's Lab has been giving a return of 26%, and they're clear-cut winner there. The EBITDA margin has been highest for Divi's Lab again. The second in that contention is Dr. Reddy's. Then we have Cipla, Sun Pharma, and Biocon. The return on capital employed, which the higher the number it is, the better it is. In that regard, also Divi's Lab is a clear-cut winner with 26% return. Cipla is giving a return of 18.08. Dr. Reddy got 18.5%. And we are going to talk also about the EPS, that is the earnings per share. In that regard, Dr. Reddy has been handsomely beating the market. It's got an EPS of 176.76, which is highest by quite a margin, and the second in line is only Divi's Lab with 51.71%. So you can see the dominance of Dr. Reddy in providing earnings per share to these investors. We'll be talking also about the valuation ratios which are being shown here. The valuation ratio like EV by EBITDA, the dividend yield, the PE ratio, price to book value ratio, price to sales ratio, price to cash flow ratios. In all these factors also, the companies like the Divi's Lab, the Sun Pharma, all these companies have been doing very well. Dr. Reddy's, the companies which have been little on the underperforming side has been Biocon, because it's got a higher PE ratio. The price to book value ratio is also on the higher side, and even the market cap to sales ratio is also very high. Which means, when you say these three ratio, the lower the number it is better for the company. But in these regard also, the company has been on the higher side. But the clear-cut winner in these three ratios are Dr. Reddy, Divi's Lab, and Sun Pharma. Even in the quick ratio, that is the short-term ratio, also these companies have been doing really well. If you look at the debt to liquidity ratio also, these companies have a very similar ratio, and they're all above the standard which is expected from these companies. Even the asset turnover ratio, the inventory turnover ratio, the receivable days, that is, these kind of factors are being very considered by the investors by investing in the market. Just to give you an example, the inventory turnover ratio for Dr. Reddy, Sun Pharma, these are also on the higher side, which means the amount of time the inventory gets rolled over during the stipulated time is on the higher side, which means they have more stocks going out and there are more fresh medicines coming in the system, which is also a good factor while considering these kind of shares. And so if you look at the comparative study which we have done on the various factors, we have considered nearly 14 to 15 factors while doing the comparative study on the pharma industry. I would say the top three companies in this regard have been Divi's Lab, Dr. Reddy, and Sun Pharma. Not in the chronological order, but these are three companies which I'll be choosing to invest in the market over a period of time, and we can expect decent return on the investment which has been made by the investors. So that is the study provided by us on the pharma industries. We nowhere recommend you to buy the shares. Use your discretion while investing in the market. But according to us, these are three companies which are expected to have favorable returns for investors over a period of time. I thank you for your patient hearing. I'll again see you in the videos of the financial education. And meanwhile, if you have any more questions, please put your queries in the comment section. I'll be more than glad to answer it. Thank you so much.